This is an interesting one. Dow Theory versus Dinosaur Theory. Well, we have a lot of people right now looking at the valuations of the stock market and the indicators of the stock market that say that the stock market is in crazy land. The valuations are incredibly high, and the concentration of earnings and of capitalization in the S&P 500 is something that's never been seen. According to Dow Theory, a bull market is only confirmed when both the industrials and the transports make new highs together. When one surges and the other one lags, it's called a non-confirmation or a divergence, and it can signal underlying weakness. It is especially obvious when you see a big market decline and then a big rally back, and one of them goes to a new high. The other one lags. That's not good when that happens because it says there's something off in the economy. The current setup is one of the longest running Dow Theory divergences in history. While the Dow Jones Industrial Average keeps climbing, the Dow Jones Transportation Average has failed to follow, and it suggests caution. It implies that the broader economy, especially sectors tied to shipping, logistics, demand, all of those things that move product around the country, that it isn't fully participating in the rally. And you can see that when you look at the stocks like Federal Express and UPS, and they are really struggling. So, of course, we see the market moving up strongly while a lot of stocks aren't following. An image comes to my mind of two dinosaurs looking upwards with a blinding streak coming across the sky, and one says to the other, "Looks bullish to me." Let's take a look at these charts and we'll get a feel for what I'm talking about, looking at the Dow Jones Industrial Average on the left and the Dow Jones Transportation Average on the right. So we're obvious we saw this big break over here into April of this year. You see also that the Dow Jones Transportation Average did the same thing as they moved down very sharply. This was a really big break in the transportation average as it came down from about 1775 all the way down over here to about 17,850, all the way down here to 12,465. It lost about a third of its value. I mean, that is a good-sized bear market. Here you see the Dow. Well, the Dow moved down from 4,500, just above it, down to about 45,000, down to 36,000. And that, of course, was about a 20-something% decline. So it was really a bear market. So now you've had this giant recovery here, as you see in the Dow Jones Industrial Average, and you see right over here the transportation average lagging. Now, I have our cycle analysis on there a little differently than I normally show it. I have no cycle lines on the top, but you can see in here, and I'm going to blow this one up for you on the Dow Jones Industrial Average, the beautiful rhythm that you see right over there is a minor cycle that bottomed right there. There's the dominant cycle. They both came down together. Remember, when there is a nesting right over here, that puts more pressure on the downside. Not sure what nesting means? Ask Slim AI and you'll get more information on that. Just go to our front page on the bottom right and you'll see Slim AI there, and click on it and ask the question. So you can see in here the reversal scout is going up over here, and it has stayed very strong, the momentum very strong. So that's a look at the Dow Jones, easily getting above the old high right over there. Now, if you look at the transportation average, you can see it has a little different cyclicality in here. These are smaller, and this decline over here finished this cycle. That was a bullish cycle because it finished well above where it started, and the peak was way on the right side of the cycle. We call that bullishly configured right-hand translation. That, of course, is a reason to believe that the stock market, the transports, will make a new high, get above that level. But they haven't yet. They've used up all of this time and they're not able to get moving. And now you could see these two blue lines right over here. This is the range of time that we would expect it to begin to come down and make the next trough. So the probabilities of it giving any kind of a confirmation right over here are very small. As you can see, we're in this Dow Jones non-confirmation period right now. And that says that the economy is off balance. That's what it means. Of course, I show lots of indicators, and all of us look at lots of indicators that are telling us that there's something going on in this market that is unusual, to say the least, and outrageous is how I see it, as people are willing to pay for the stock market at levels that are just incredible. You look at NVIDIA, the price to sales in there are just off the charts. What you're paying for that. I mean, the stock is going to have to earn money for decades to catch up to that. And we know there's going to be problems in the middle of that. So there is a lot to be concerned about. Of course, when I put up that kind of information and the market moves up to new highs and our indicators have stayed bullish, then I get the comments out there and people are right to me, Slim, you're a dinosaur. I mean, you're just a boomer. Don't you know that things have changed? This isn't like the old markets, and just buy them. I mean, that's all you can do. Of course, they've been right. Disregarding everything that's made sense for the last 51 years that I've been trading, and of course 100 years in the market and more, that has tended to be over the years, over the century, a fool's way to approach the market. Because eventually, and of course eventually could be months from now, what makes the most sense right now will come to fruition. But maybe I am one of those dinosaurs, and again, it comes to mind that particular image looks bullish to me.